Good morning. You are listening to the Perivis Daily Wrap. It is 7 a.m. on Wednesday, February 11th, and the tone coming into today is steady, with Indian equities carrying a 3-day winning streak into the midweek session. The mood is constructive, but leadership is narrow in parts, and traders are watching whether foreign buying and policy-linked themes can keep the rally going. Yesterday, Indian markets closed modestly higher for the third straight session. The Sensex finished at 84,273, up about 0.2%. The Nifty ended at 25,935, also up about 0.25%. The day was positive from the open and stayed in the green, though there was some late volatility around the weekly derivatives expiry. What stood out in yesterday's tape was the sector mix. Autos were strong and metals also found bids. In contrast, parts of financials and select technology names were softer. On the Nifty, gainers included Tata Steel, ONGC, Bajaj Auto and Mahindra & Mahindra, while names like HCL Tech and Bajaj Finance were among the laggards. Now, on global cues, keep it simple this morning. First, the key driver for yesterday's risk-on tone was the earlier strength in US equities that helped Asia trade firmer. Second, attention remains on upcoming US macro releases this week, with traders looking for signals on the US rate path. Beyond that, the bigger swing factor for India today is not overseas indices, it is flows and domestic catalysts. And on flows, the most actionable point coming into today is that foreign institutional investors were net buyers by about 2,255 crore rupees in the latest reported session. That foreign bid has been a clear support under the market's recent grind higher, especially when local profit-taking shows up late in the day. Now turning to the key developments since the last market close. 1. The auto demand picture got a fresh data point. FADA has reported that overall automobile retail sales in January rose about 18% year-on-year to roughly 27.2 lakh units. Two-wheelers were the standout with about 21% growth, tractors were up about 23%, and commercial vehicles and three-wheelers also posted double-digit gains. Passenger vehicles grew at a slower pace, a little over 7%, but still positive. FADA also flagged that dealer confidence for the next 3 months remains constructive, with a large majority expecting growth. And that matters because autos were already leading yesterday's sector performance, so this data reinforces the near-term narrative around rural demand and broader consumption resilience. 2. Policy-linked steel and manufacturing themes remain in focus. The government has launched the third round of the Production-Linked Incentive Scheme for Specialty Steel, referred to as PLI 1.2, targeting 8.7 million tons of capacity addition in upgraded alloy steel. Alongside that, the report cited about 85 memorandums of understanding signed across 55 companies with investment commitments of over 13,000 crore rupees. In market terms, this keeps the spotlight on the metals complex and on capex-linked names, especially where order books and execution are already strong. 3. Trade and exports remain a live headline theme. Markets have been tracking optimism around an interim trade arrangement between India and the United States. Also, Commerce and Industry Minister Piyush Goyal is scheduled to meet export promotion councils and industry associations today, February 11th, according to the report. Traders will listen for any practical next steps, particularly around sector-specific opportunities and any near-term friction points. Now, on the corporate side, there were several updates, but only a few are truly market-moving for broad indices. Let's focus on the biggest ones. First, Larsen Toubro. L&T's transportation infrastructure business has secured a road project in Dubai for improvement of Latifa bin Hamdan Street. The order value is described in a band of 1,000 to 2,500 crore rupees with a 36-month completion timeline. Separately, L&T has incorporated a wholly owned subsidiary in the Netherlands, L&T Energy Offshore Wind BV, to engage in offshore wind business and provide turnkey EPCIC services. Put together, these are consistent signals, a steady international order engine in core infrastructure, and a clearer push into offshore wind platforms. Second, Tata Motors Passenger Vehicles and Jaguar Land Rover. The companies have commenced operations at a new manufacturing facility at Panapakka income in Tamil Nadu. The first vehicle to roll out is a locally manufactured Range Rover Evoque. The company describes this as phase 1 of a greenfield plant intended for next-generation vehicles, including electric vehicles for both the Tata passenger vehicle business and JLR. This is a capacity and localization signal, and the market will weigh it through the lens of ramp-up execution and product mix. Third, KPI Green Energy. There are two separate updates here. One, its subsidiary has secured an international order in the United Arab Emirates for a package that includes battery energy storage, modular UPS, and a solar system for a containerized data center facility. 2. KPI Green has secured orders from Adani Group entities for electrical, civil and allied works for a 300 megawatt AC project at the Khabda Hybrid Renewable Power Project in Gujarat. The company says its aggregate orders from Adani Group entities tied to Khabda now stand at 834 megawatt AC. This keeps renewable EPC and execution names in focus, especially those with repeat orders in large parks. Now, a quick look at earnings, and we will keep this tight, limited to 3. Navin Fluorine reported a sharp jump in profitability for the December quarter. Consolidated net profit more than doubled to about 185 crore rupees, and consolidated total income rose to about 908 crore rupees. The headline here is the scale of the profit jump, which is the kind of surprise the market tends to reward if cash flows and guidance also hold up. Wockhardt reported a swing into profit. On a consolidated basis, net profit rose to about 59 crore rupees from about 14 crore rupees a year earlier, with consolidated income up to about 913 crore rupees. The key takeaway is the continued improvement versus last year's base, and traders will look for confirmation that the move is not just one quarter. Escorts Kubota posted steadier growth. Consolidated net profit rose by around 12% to about 358 crore rupees, and consolidated income increased to about 3,435 crore rupees. This is not a shocker print, but it supports the broader narrative of stable demand and execution in its segments. Beyond earnings, there are a few additional corporate signals worth noting briefly. Indian Hotels has signed a Taj Hotel project in Veligama, Sri Lanka, a greenfield development with 220 keys including luxury apartments. That is an expansion signal for the international pipeline. Bonfiglioli Transmissions has filed draft papers with SEBI for an initial public offering, reported as likely over 2,000 crore rupees. The issue is entirely an offer for sale with no fresh issue component, so the company itself would not receive proceeds. That detail matters for how investors frame the IPO as a shareholder exit rather than growth capital. And in autos and energy efficiency, Talbros Automotive has acquired a 26% stake in a Clean Max special purpose vehicle for captive solar power, aimed at supplying its Haryana manufacturing units. It is a small ticket transaction, but consistent with the broader corporate trend of locking in power costs and decarbonization targets. Now, what will markets watch today? First, watch the follow-through on foreign flows, because the recent up move has leaned heavily on that support. If the flow picture stays strong, it tends to cushion intraday dips, and if it fades, the market becomes more sensitive to stock-specific disappointments. Second, watch trade-linked headlines out of today's Export Council's meeting. Markets are already positioned around the idea of improving trade visibility, so the focus will be on concrete timelines and sector call-outs. Third, keep an eye on autos and consumption proxies after the FADA January retail numbers, especially two-wheelers, tractors and rural-facing plays. The data was strong, and today's trading will test whether that strength is already priced in. And finally, watch metals and industrials for spillover from the specialty steel PLI push, particularly where companies are tied to capacity expansion, high-grade alloys, and defense or strategic supply chains. To close, the single takeaway this morning is this. Indian markets are entering the day with momentum, supported by foreign buying, strong auto retail data, and continued policy and order flow signals in infrastructure and renewables. The next test is simple: whether the rally can broaden beyond a handful of sectors without volatility picking up. That is the Perivis Daily Wrap at 7 a.m. Thanks for listening.